Hey guys, what's up everybody? This is Eric, Mr. Fired Up Wealth, and I want to do just a quick screen share on Cisco Systems. Now, this stock obviously reported earnings last night, and they actually beat on the top and bottom line. However, their guidance is quite a bit light. Watched a couple interviews from the CEO, and essentially it looks like, obviously Cisco is an international company, and internationally they're seeing some slowdown in enterprise growth spending, spending for growth. So what you see is you've got this consumer in the United States that's very strong. You're seeing consumer discretionary and the cyclicals doing very well still. The economy's humming along. But these big international companies like a Cisco Systems that sells on a global scale, they're seeing that slowdown. Of course, there's some reasons for that, and we've known there's been some global slowdown for a while. But I just added 150 more shares. I believe I have 675 shares total right now. And if you look at it, 44.85 is what we're trading at. Let me just update this here. So we're at $45. I just bought 150 shares. I added at $44.99. It's paying just under a 3% dividend yield. It's got a 19.31 PE ratio, price to earnings. The PEG ratio on a 5-year is 2.94. Why do I like the stock? I only like it as a long-term DGI hold, and I like it because if you look at 5G, right now they're building the kind of the macro infrastructure. So all the large cell towers, things like that. So you're seeing like American Tower and a lot of those, Crown Castle doing very well, of course. But what you're going to see in the next couple of years, as early as next year, the end of next year and into 2021, you're going to see more of a micro build out on the infrastructure for 5G. Cisco is the best positioned company for the network infrastructure that's going to be required on a micro level. So all these businesses, the cell providers, et cetera, they're going to need to update hardware just like your router at home. So your router at home, maybe it only handles 1 gig, and that might be enough. Maybe you only have a 250 megabyte service. Well, with 5G, if you want 5G and you only have a router, your hardware only equips essentially 1 gig, it's not going to work anymore. So let's just, as an example, say you get a 10 gig network. It's not going to work with a 1 gig router, right? Any of the switches, anything involved. So you're going to see growth in this company. The question is, are you willing to wait for it? Because there's probably not, over the next couple of quarters, it's probably not going to get much better. But if you look at a 5-year hold, I'm building my position. I'm getting my dividends. I'm dripping those, reinvesting those dividends. And I'm trying to get as many shares as I can. And in 5 years, I'm going to be sitting on a really nice pile of cash. And I've done this throughout my investing career. I recently with AT&T and AbbVie, where I've had these forever, and they were beaten down, and everybody, said sell, sell, sell. It's terrible. Don't buy it. And now sitting up, huge percentage-wise, and a lot of that's from dividends being reinvested over, 5, 6, 7 years on some of these. So if you're a long-term investor and you're looking for an individual stock and you're trying to get some decent yield, for me, this is one of the best. It's now I think it's my 4th largest position behind Amazon, QQQ ETF, and Microsoft. So anyway, guys, take a look at Cisco. Could it go lower? Absolutely, always could. That's why a dollar cost average. If it goes lower, then I think the next support level is around $41 or something like that. If it gets down to 41, I'm probably going to add a couple hundred more shares. So hope you're doing well. Appreciate you taking a look at this video. Have a good rest of your day.